name is Habeb Alamdi, and today we'll be talking about the basics of trading and financial markets. First of all, I'll be able to look at the chat. Do let me know if I'm going slightly fast or not, because I'll just go with the speed that I'm able to go with, and hopefully for everyone to enjoy it. And we'll see you guys into this webinar. So let's start it. Let's kick this off with my story. Right here was my first Forex or investment transaction. I actually have this right here in the room. It was after school, and I was in UCSI, high school. I left, it was after school, I went to the mall. It was around 5 p.m. I had a 50 ringgits in my pocket, which is the local currency of this country. And then I went to the mall. I saw the foreign exchange place, and I was like, I know for a fact people make money, exchanging money and into all that. So I said to myself, you know what, I have 50 ringgits, let's see, and make my first investment. And I went there and I gave him the 50 ringgits. Exchange, he gave me actually $13, 1-3. And then that's the place where I was like, okay, if I asked him, if I return this back to you, how much are you going to give me? He's like 43 ringgits. So I was like, okay, so I'm down 7 ringgits. So that means I should be waiting till the dollar to gain strength and make my money. When I was doing the calculations on how much the dollar needs to gain strength, it's huge. So I knew that's not the right thing. This is not how trading is, and that's not how it goes. So just a quick story of mine. This was technically my first investment. As you guys could see, that's the date, July 7th, 2014. Again, this is a very valuable piece to me, and that's when the journey started. I've been trading for 6 years, as many have seen so far. And that's pretty much it from my story. So let's really get into the details. What truly is the financial market? So simple. It is a transaction of buyers and sellers of X assets. So X asset is basically, you could say a watch, you could say a pen, anything. That's what financial market is. So you as the buyer, so you're either going to buy an asset because you think that asset will gain value somewhere in the future and then sell it at a higher price in here. So here, I just gave a good example. Donald Da Vinci. Let me see. Can you guys hear me? Just got to make sure that everyone's actually hearing me. Okay. So right here, Donald Da Vinci is a good friend of mine, and he makes good art. He's a good friend. And back in the 90s, I bought this Mona Lisa piece from him that he drew, and I bought it at $1,000. Somewhere in 2020, I sold it at $10,000. So there goes, I have $9,000 in profits, which is pretty good. So that's pretty much what financial market is, guys. Let's say even this pen right here. If I think that's a valuable pen, I'll be buying it today and thinking somewhere in the future to sell it at a higher price. And I'll only be doing that because I think this X asset is valuable. No one buys an asset because they don't think it will gain value somewhere in the future. Again, that's how basic financial market is. It is not a complicated system. It isn't a complicated financial place. It's very basic. It's just an X asset. So to the next slide. Right here, I'll show you guys only 3 assets. We technically have more. We have bonds. We have so many different trading assets out there. So FX spots, which is the Forex currencies. You have the euro, the dollar, USD again. Stocks, which is like Apple, you have Tesla. There's so many companies out there. Commodities, those are all X securities. Commodities, we have gold, oil, silver, copper, everything. If you might even want to think about it, everything you are seeing right now is traded in the financial markets. To metal, coffee, tea, anything you can think of, it is in the financial markets. Either it's in futures markets, FX markets, somewhere, but it is all in the financial market. Again, why is it in the financial market? Because people think this X asset is valuable. And somewhere in the future, you'll be selling it at a higher price, and that's how you make profit in the financial markets. So right here, I just gave I think, of a good example on the markets. Again, that's on the investment world and trading world. So let's just assume there's a coffee shop 5 meters away from the university. Let's say I study in Taylor's and there's a coffee shop nearby. At this coffee shop, at this current time, Right now we have assignments, so university students are on their final year assignments. And of course, what do you expect? This is, again, those are three components that are very critical before you invest and trade. So what I did, my analysis, so I analyzed the amount of students in the university having their finals. Let's say it was 2,000 students are going to have their finals next month. So studying in the coffee shop, sales should, on the previous years, during students will go up. So technically the sales will be going up. So I'll be studying the previous years, how much are the sales of the coffee shop when students had their finals, to see, are students really consuming coffee during finals or not? Let's assume they were. Now, I also need to label my risk. When should I know it's time to pull my investments if the coffee shop sales doesn't increase within the first week? So again, let's say it goes to finals week are coming, and I see I invested in this coffee shop, and so far there has been no sales going up the first week. That's scary for me. I'm like, okay, I need to pull my investments. And again, let's just give an example in here. It's stocks. So to give it one more time, maybe I went a little bit too fast. Proceed, everything's clear. So let's say this coffee. I think students in the university are going to consume it because it's time for us to, study, work hard, and coffee is very common consumption of a product. So for me to think that students are going to consume it highly, I should invest in whatever coffee stocks in that, because again, the sales will increase, which will add value to the company, and that's where we'll be making money. And let's say if they don't consume the coffee, this is the risk of investment. It's on like, okay, it's time to sell off my stocks and leave the market. So thesis, it's basically what is your conclusion of your analysis. Sales in the coffee shop should increase as students in their finals. Why? You have to always, you can stab yourself with it. Could be a bad example in here, but this is a very good one that I thought of. So what is leverage? Let's get into it. Let's say I have $1,000 right now, and I want to buy Apple shares. Now, I do know for a fact, and let me just tell you, if you're not going to use leverage, so just your capital, which is, I would say, if you don't have $100,000 and you don't have leverage, and you don't want to use leverage, it's okay. But if you are below $100,000 and you don't want to use leverage, you barely will make money in the markets. You won't do anything. So again, I have $1,000. I want to buy Apple shares, but I know $1,000 won't really make me a lot of money, so I use leverage. I don't want to jump into details, but as I said earlier, leverage can increase your buying power. So I can have $1 equal to $10 in my account, or let's say, which is what we call 1 to 10, 1 to 100, 1 to 1,000 even. So every $1 is equal to whatever leverage you set yourself, and it's all done by you. You can have your leverage up to 10,000. So every $1 could be, 1,000, sorry. So leverage is very good. Now, how can we use leverage in the real world? With leverage, I can choose to earn or lose. Example, let's say this is Apple stock, okay? And it goes up 1 point. So each point, I could make myself $10. And I'm the one who chooses this. You have to understand this. I'm the one who chooses how much I lose, how much I win. So I can choose 2 lots, or again, I'm using the volume terms. If with $20 per point, that means each point goes up, I make $20. I could be 30, it could be 40, 50, 60, 100, whatever you want. But don't let that, I would say, blur the vision of risk, because risk is a very, very important factor in trading. Because if, let's say, I buy in today right here at whatever price, let's say, let me use my hands, better example. So let's say I buy in here and I choose to earn $10 every point. So market goes up, I'm up $10 each 1 point. So market goes up 10 points, I'm up, 10 times 10, again, 100. So what if it goes down to the opposite side, you will be losing. You will be losing. So if market goes down 5 points, you're losing $50 if you're using this thing, the first one. If the market goes down 20, okay, you're losing $20. So it's all set by you, and that's leverage. It helps you to gain more money, or you're going to lose more money. It's either one. So you have to make sure your risk management is set, which we'll talk about in the next slide, I think. Right here is just another example of leverage and trading itself. Let's see. So let's say this company, whatever it is, Tesla, it's gold, it's oil, it doesn't matter. It's an asset because all assets are just the same, if I should say. You don't, it doesn't really matter if it's Forex, if it's stocks, if it's whatever. The principles of trading, they're all the same. So let's say it jumped 770 points, as we could see. I just summed that up, 770 points. Depending on my buying power or lot size would be the profits I have made. So if let's say I choose one lot, again, I'm here might be using trading terminologies to summarize up for you guys. Lot means your volume. How much are you getting into? So if let's say I choose 5 lots, that means I'm telling you I'm getting with 5 volume. Or I don't want to jump into details what is lots, but it's basically your buying power figure. Now, if let's say I chose $1, so each point I'll be earning $1. So with that, 770 points times $1, 770, and you guys will see the math in here, 10, 7,700, and 77,000, all the same, could be the same run. But one thing, just bring it out one more time, it's the same for the downside. If you buy in here and the market goes down, whatever points, you will be losing the same amounts because this isn't just for the upside, it's the same for the upside and downside. If I have $1,000 account and I'm buying at $1 per point and market goes down 50 points, I am losing $50. That's 5% of my capital. So again, risk management, which we'll talk about again into the latest slide. To spice things up slightly, I usually don't, and I never like to talk about my trades and whatsoever. It's very confidential to me and personal to me. This was the 2016 trade that I made. Seeing this makes me smile. It's back in Brexit times, 2016, June 23rd, actually, and this is the after effect. This is the first time in one day I made my $2,000 profit. As you guys could see, I made a $400 withdrawal to reward myself. And this was during the Ramadan season for any Muslims out there. And it was a really happy moment for me. It was a big, big accomplishment. The stress behind it was high. I'm gonna lie, it's very important in trading, no matter how much you earn or lose, be humble. Because if right now, after I made this $2,000, I think I'm the best and whatsoever, which made, I think I lost $500 right after that. And it was all because of me. It was all because of my emotions. I was just too excited. I feel like a king, which I'm not. Always in trading, being humble is very, very necessary, I should say. But yeah, that's the Brexit trade and very exciting times. Everyone can be one and can be better than me, and that's what this webinar will be, for everyone to kickstart it. Here, I'll just be sharing some before and after effect of some charts that I did previously. This is Apple stocks. So I analyzed and I thought that from this price, it will drop down to this price, which is, as you guys can see, that's the after effect. From there, boom, it dropped and reversed all the way. You might think it's a magic wand, it's a secret. No. Look, as I said it earlier, trading principles are all the same in all markets, commodities, stocks, Forex, in all. You just really have to learn. It isn't about how much you have. It isn't how much your capital is. It's all about this. It's all about your knowledge, guys. Could never be about your capital. Could never be anything except your knowledge. And emotions. Control of emotions is very, very important. Yeah, this is Bitcoin. As I stated once, all of the principles are the same when you are viewing the market. This was before when it was at 6,000. So we're talking 100% analysis change. I said it that it will bounce from here down to there, 3,260. It actually dropped to 3,000, I think down to 3,000 itself. But yeah, that's the after effect. It dropped right there. No magic. It's all the same principles. I'll say it again. I want you to guys always remember it, which we'll talk about in the next slide. It's your knowledge. Nothing else but your knowledge. Here, is gold analysis. This is this year, actually, this year's analysis. Let me just drink coffee quickly. So this is the gold analysis that I had this year, where we had 5 years of consolidation. Now, what does consolidation means? Just give out quick trading lessons right here. Consolidation means sideways. It's just moving like that. It's not going up. It's not going down. It's just bouncing up and down, up and down. So it's actually been into this consolidation from this box for 5 years. And finally, actually this year, it blasted and broke through it, which means it's very strong. No market will break through very, very strong zone or very strong wall, if I should say, and not be consistently massive of a momentum. So right here, when gold was 1,500, I analyzed that it could bounce back from here or from there up to 1,600, which it eventually did. As you guys could see, that was the target, and it reached. Right now, it's at 1,730, if I'm not wrong. It's massively bullish. Tesla, this is Tesla stocks. I really hate Tesla, just saying. Yeah, where was it? Yeah, this is the before, so I mixed it up a little. So I analyzed that it will go from $635 down to $398, and boom, from there straight away it reached massive. And we'll say it once, we'll say it again. Isn't magic. It's all on the charts. It's all on your knowledge. It isn't your capital. It's all in this. All you need is to consistently expand your education on the charts. So my favorite topic, and the topic that every trader, even professional, even immature, misunderstands: risk management. Everyone consistently would ask me outside of either this webinar or in general, trading is risky, or, I know people that lost everything, people go bankrupt because of trading, investing is risky, all this, and I'm sure everyone has heard it, no doubt. So I will answer this question for you. It's very basic, and it's all actually, if I should say, the professionals wouldn't lose their house, but the immatures would. And here would be the example. So to answer this question, is it true we can lose all our money in one day? Let me tell you, I'll say it here 100 times: risk management. So we have house ground rules, which are very, very practical between all traders, and we follow them, and we sort of identify the good traders and bad traders based on their risk, and not just their education or their capital. I'm not interested to hear your capital. I'm not interested to hear how big you are. I'm interested to hear what's your risk management and your returns. Now, what we do, this is the house ground rules. So you determine your risk upfront. How much are you really willing to lose? Stick to your risk percentage no matter what. This is very much of a discipline, guys. Because no, you can't lose everything in one day. Yes, you can't lose everything in one day. It's you who choose to. You can gamble 100%. It's up to you. To give it an example, and why did I give a fired house in here? It's the same example in real life. If you want me to answer this question, if let's say you own a coffee shop, can you lose everything in one day? I will answer you yes, if you burn it down. I know you're like, that doesn't make sense, but it's all on your hands. It's you who determine everything. It's the same in trading. It's the same in investing. You are the one who is willing to say how much you risk. Do you want to risk $1? Do so. Do you want to risk $2? Do so. Want to risk $3? Do so. It's you who decide. And that's what risk and that's what trading true is. It isn't how good is your knowledge. Let me just bring it out. It's your risk management. And okay, I wouldn't say how good is your knowledge, but how good is your knowledge in risk management. It isn't how big of your capital, because we all have seen it. I mean, I've seen people send millions to zeros and the opposite, from $100 to $1,000. Oh, let me actually bring you back, guys, to this. I forgot. Speaking of risk management on this thing, this is very interesting. So when it was 2014, when I started to trade, it took me 1 year to actually make my first investment. And what I did, I was a gamer. I was addicted to gaming. So I sold my keyboard, I sold my mouse, I made some money, collected some money to start my trading. And I had, as I remember, $450, and I started with that capital. And again, I jumped topics just to tell you how important risk management is, and it isn't how big your capital is, it's about your knowledge. So I started with $450, and what I did, I put in straight $100. And I made it in the first 2 weeks to $200. So I was cocky, I was happy, I was like, wow, I'm the best, I'm the greatest, which I'm not. And guess what? So I did not control my risk, because why? I think I'm the beast. The higher risk you have, sure, the more returns, but the more you're gonna lose. So I thought I'm the beast, I'm the best, let me risk high. And I went from $200 down to $120. I dropped from 200 to 120. So I was sad. I was like, oh, but okay, I think I get the mistake, which is risk management. And I put in all my capital. So it was totaling 350 since I put in first $100. Then, I earned, I lost, then I top up the rest. And from there, the first 2 months from $450, I made it to 3,250 or 3,350. So it's a big capital if you want to think about it, from $450 to $3,000 within 2 months. It's very good. It is a good amount of capital. And it's just on the risk management side. I could have made actually $20,000, but it's very possible that I'll be losing it all to zero. But it's because I made very strict on risk management, and it's all about your risk management. And we'll talk about something, guys, which is compound interest later on. So again, you determine your risk percentage, and you must be disciplined and stick to it. Plan what are the actions you will do if you face a streak of losses. What do I mean by this? Which happened to me, let's say, after the Brexit. As I told you guys, I lost $500 because I thought I'm the beast, and it's a consistent thing that traders have. When you make a lot of money, you feel like, I am the best. And that's the challenge in trading. It's actually psychology, and for you to calm down. So when I lost that $500, since I made this action plan, what I will do if I lose big or streak of losses is to step back. So I stopped trading for 2 weeks, and then I got back to trading, and everything went fine. Because if I traded right after I lost, which what we call revenge trading, you're like, no, I want my money back. No, I want my money back. You see, you're no longer focusing with the work. You're focusing with the money. Your focus is gone. You're no longer thinking how I should make my money. No, you just want your money back, which is, again, very idiotic. Of course, if you make it, it's fine. You need to make these mistakes to learn from them. As I stated, house ground rules. We never risk more than 1 to 5%. 5% is very much for professionals and very for advanced traders. I wouldn't suggest any trader that is beginning to trade this week, next month, to go with 5%. You always want to risk 1% because here I just made a quote: lose little and earn medium. That's what trading is. Because I'll be showing you guys later on the example of if you want to risk high, how it's going to be, and how it's going to be if you risk low. We'll say it if you guys actually listen to this audio or this video. Again, you will see me repeat risk management, I think, more than 20 times or like 30 times, because it is very critical. It's not about your capital. You have to let the compound interest, so your capital to consistently gaining, let it do itself, and you stick to your risk management. So, common question as well, what risk management should I be sticking to? So here I just give an example. Let me tell you guys, never think about money. I know you're like, yeah, I will try to do so, but it's hard, which is very logical, but try, if I should say. So here, let's say I have $10 in my pockets. Then you check your pocket again, and boom, the $5 disappeared. Logically, you will feel sad because that's 50% of what you had, because again, $5 is 50% of the $10. But let's say you have $1,000 in your pocket. Then you checked your pocket again, and just $20 disappeared. Logically, you will feel less sad because that's 2% of what you had compared to this. Even if you look at it, actually 5, 10, 20, it's big. There's a huge difference in here. But no, because of the percentage-wise, that's the funny thing about trading, guys. Psychology is a huge thing in trading. Huge thing. Because again, I'll say this, maybe some of you will feel upset if you lose the $20, but I'm just saying, if you lose $20, for you to earn $40, it feels better than you losing your 50% to make 100%. It's very risky. That's a very common rule that we do, to ask myself, how much am I willing to lose and not be emotional? Am I willing to lose 2%? I ask myself. This is how we go, and I need everyone to focus with this, because trading isn't about quick money, which we'll talk about later on. It isn't about that. It's about your risk management. You can be, don't want to use bad words, but you could be a bad trader or a stupid trader. We all were stupid traders, but risk management is a no. You have to stick to one and follow it all the way, because if you have low risk management and when you make mistakes, it's less painful and you'll be able to recover faster. As we'll give an example in here, if your $10 went down to $5, that's 50%. For you to get back your $10, your initial capital, you need to go 100% on return, because again, for you to make that $10 back, you need to make this $5 to another $5. You have to double it, which is a lot harder, by the way. So risk management, guys, is very, very critical. And if you're going to start, go with the lowest possible risk, because you don't want to make money. You actually just want to stay focused. You want to be in the vibe, in the wave. That's very important in markets. So into the next slide. Okay, well, let me just pause in here because the next slide slightly advanced. Let me just drink coffee first. It's a very critical thing, guys, drinking coffee. All traders should drink coffee. Okay, so it comes back to the second one. Is it true we can lose all our money? Right here, I actually jump into the real work, into the real part of markets and trading. Let's say I have a $10,000 balance, and I took this buy, whatever, again, Tesla, Apple, Forex, gold, it doesn't matter. It's X asset. Just change the coordinates into it, or the symbol of it. Nothing much. So I bought in and I put stop loss and take profits. You're like, hey, what is stop loss? What is take profits? That comes into this question. Can we lose everything? So stop loss is the level that you set yourself. It's you who set it. You say, okay, if the market comes down all the way to here, I think I better be out and I want to leave. I don't want to stay in and be in a loss. So again, you can say, and you said it yourself, if market comes down to here, take me out. Get me out of the trade, even if I lose, which here, I told myself I'm going to lose $300. And take profit is the opposite. Because if, let's say, I think the market, once it reaches this place, it will drop, or it will not continue to go up. This is the place where I think the market will stop. Take me out from here. Let's say here, I'm at $600. So let's jump to this example. This gives us into an example of professional trader and an immature trader. We have a balance of a $10,000. I just had to give a big balance because to make it slightly fancy. So again, we'll say it once, capital doesn't matter. And I took a buy and take profit, which, as I said, where you want to take your money out, or you feel like, okay, I'm done, I should be out, it's $600. And my stop loss, where I'm like, okay, if I lose more than this, I feel the markets will continue to drop, and that's it. It will, continue to sink, drop, 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 drop. You don't want to hold your trades. So stop loss does it automatically, because we can't be 24 hours on the charts. And that's the point. You can't be 24 hours on the charts. So take me out at $300. So here, as I said, professional trader. So he uses the proper use of leverage, because as I said, leverage is the buy-in power you're able to get into the markets. Because I can choose to make as what this guy makes, because look, it's the same thing, the same chart, same money, same balance. This guy is going to make $20,000. This guy's going to make $600. This guy is abusing leverage. He's going all in, which I gave an example in here. He's almost going all in. He's risking 50%, which is very, very dumb. And I'm sorry to say this, because by the way, guys, just to give you upfront, I'll be slightly harsh in this webinar because I really want to care about everyone's performance. And if I become easy on it and compliments, it's okay to risk high, you will be losing, and I don't want to see that. I'm using dumb because it is really dumb and you really shouldn't do it. And try not to do it. If you did it, you're not dumb because I've done it, everyone has done it, and it's fine. But I need you to understand it's wrong. It's not right. If you see somewhere in Instagram or someone showing he flipped $10,000 to $1 million in one day, he's wrong. He's doing it wrong because I dare him to show 1 year, or you got to show me 1 year of performance of flipping that 100% return, which is very logically impossible. So yeah, to continue, a proper use of leverage. This guy is a professional trader in risk management. He risks 3% to earn 6%. As I said, go with what's capable for you. To me, if I have a $10,000 account, I feel losing 3% is fine. I'm happy with that. And if I earn 6%, I feel much more happier. So to the opposite side, if you're again, this is an immature example, which very much of everyone wants to see you doing billion-dollar accounts, which is the abuse of leverage, which we come back to this. If leverage is abused, it's possible to lose massively. So yeah, so in here, he's risking 100%, actually not 50%, my bad. So he's risking 100% to make 100%. You see, I get the part where you say, but that's a lot of money if you're gonna earn. Yeah, but if you lose, you will have nightmares. It's pain. I would say it's worse than a breakup. It's worse than anything you can think of. It's really bad. It feels bad. So never, I want you to code this. And if anyone has their pen and their notebook right now, I want you to write this down. It's never about how much you earn. It's about how much you lose. You should go with what you're willing to risk. Never about how much you're gonna earn. Because when I think about it, if I'm gonna make $10,000 to $20,000, that's sexy. That's fancy. I mean, come on, who doesn't? But if you wanna look at the downside, I'm gonna lose everything in just one shot. Just one bullet. You just have one bullet and that's it. Your life can determine when it. And that's very, very much of what trading isn't. Trading is about you staying calm, you taking it easy, because if you start to be stressed, if you start to be scared and whatsoever, it'll be painful. You won't make good returns at all. I wouldn't say this is a good example, but that's why you might see, if you guys have seen the movie Wolf of Wall Street, why they make their employees happy, because you must be happy. When you trade, you must be confident, you must be comfortable. If you are stressing anything outside of trading, it will affect your performance. It will really affect your performance. So we'll jump into mindfulness, meditation is something we do. So it comes back to this. If you're gonna risk high and you lose, it will be a painful, painful scar in you, and it'll be taking time for you to recover from it. So to answer this question, can you lose everything in 1 day, 1 hour, 1 minute in trading? I wouldn't say yes. I wouldn't say no. It's you who make the decision. Because if you want to risk everything, that's fine for me. But look at the downside. Even if you have the huge upsides, it's always you who determines everything. So no, you can't lose everything. It's you who determine everything. It's you who risk everything. It's this. If you're willing to risk $10,000 to make $20,000, then be my guest, do so. But if you want to do that, let's say you made good trade and you actually made it through, you might feel happy. Within 20 days, I would say you have 1 month before you go to zero. Because all it takes is just one mistake or two mistakes and you're gone, out of the business, just out of the business. And it's painful, guys, because the bigger the capital you have, the harder it is for you to recover from big losses. And let me tell you one fact. The bigger capital you have, the more disciplined and more scared, if I should say. That means you're taking trading very, very seriously, very strict, because you're talking, let's say, $50,000, $100,000. Who wouldn't take it seriously? Okay, we'll jump to the next slide. Okay, so here, by the way, just to bring it back, I'll just be giving an example of a professional trader and an immature trader performance in the long term. Okay, so long-term performance with proper risk management and immature. So the red line is the immature. And one thing, because I don't want to take credits for this, it's a guy named Mark Douglas. I should definitely, everyone needs to write his name, Mark Douglas. He gave this sort of example. It's called boom and buster, which means you earn big, you lose big, you earn big, you lose big, and then you eventually go to zero. By the way, so let me bring it back to Mark Douglas. He's a psychologist, a trading psychologist, if I should say. And he brings very, very much of beautiful insights into the market. And this example goes to him, credits to him. So here, the red line is the bad trader, or if we should say the immature. He starts, you see, the first trade, boom, he made from $1,000. So we started from $1,000, let's say. He made it all the way to 2,000. He doubled his money on the first trade. He feels like a king. Now, next trade, he's down to 1,400. Painful. Again, guys, you need to understand this. As a starters, you might not see it right now, but it's all your emotions will affect your performance. As I said it, external factors can affect your performance in trading, guys. So don't ever play risky. So here he made a lot of money, then you lose a lot of money, then he's back to making a lot of money, then he lost huge, he's down to like to 500. Now he's big all the way to 2,500. He feels, you know, you're about to explode of power. Your ego is about to go up. You're like, you know what? Nothing can stop me because look, I made from $500 to 2,500 or like $2,300 in 3 trades. Who's the king? You tell me. Yeah, it's you if you want to see it in the short term. But who's going to be poor? Who's going to be poor is you. You're going to zero. Sorry, guys, I really have to drink because I'm talking a lot. So, in the blue line, we have a pauper and professional trader. He chooses to risk little and earn medium. So as you could see, he's very slow with his progress. Yet, the immature, you see, if we see in here at the start, this guy with $1,000, he's maybe up $100. If I bring, let's say it's me, okay? Let's say it's me. You know what? Let's just give those examples, maybe. Let me get a red pen. You're lucky, guys. I have a red pen and a blue pen. So these two guys. The red, so the red is the guy made $2,000 right here. He's very happy. Logically, if me and you look at these two guys at this point, at this time right here, this guy is only up $100. He's up $1,100. This guy is up 2,000. You feel like this guy is the professional. Well, I'll be honest. I can't tell. I can't say yes. I can't say no. Then eventually this guy lost down to 1,500. Yet this guy is only up 1,200, which is the blue guy. Logically, this guy has always been ahead, and you're judging his performance, and I want everyone to focus with this. This is very critical. Just because your performance in the short run is good doesn't mean it will be in the long run. Because again, there's so much factors which you can't jump into, they're very advanced, that affect your trading. Just because you're doing good and this guy made money back here, back to 2,000, which is very much of ahead than this guy, doesn't mean he's better traded than this guy. How can you know? And let me tell you, which I told you earlier, all of us as professional traders, we look at the trader who has consistent risk management and sticking to his rules. It isn't about the guy who's consistently fluctuating. I'm not gonna, damn, I was about to use bad words. I'm consistently into that. Shit, which is the bad word to me. So this guy, he's the boss, he's the, whatever, this guy is the bad one, he's shit, or he's a bad trader. No, wait into the long run to see his performance, which you guys eventually see right here. This guy is $2,000 up. This guy is zero. He's gone. He lost his money. Why? Because, you know, he's consistently happy, then he's depressed, then he's happy, then he's depressed. One day you feel like, you know what? Let me risk everything. Whatever happens, happens. And you do so, and you lose everything. Then you're depressed. Very upsetting. But this guy is calm. what everyone needs to be. You know, I'm citing this because I would love to help everyone with this, and I want everyone to take this very seriously. Risk management, guys, it's the tool of trading. It's the secret of trading. It isn't about your big money, no. Because look, this guy was having $2,000, and then it's gone, and then it's up, then it's gone, then it's up, then it's gone. But this guy is very consistent. He's very calm. He's very sharp. He's disciplined to his rules. He's willing to risk what he wants to lose. So he's like, you know what? I'll stick to 3% and there. You see, he's earning, losing, earning. Like I'm just saying, that's a zigzag, up and down, up and down, up and down. But slowly, in the long term, it will lead into a positive returns. So let me tell you guys, please don't think you want to do $1,000 to $2,000 in the first week. Is it possible? Yes. Yes, it is possible. I'm not going to say I've done, but I've seen big numbers, more than you can think of. I've seen $50 to $500 in 1 week. You're like, $50 to 500, that's good, that's big. Yeah. But again, it's all just stupid, immature. It's very immature. Don't let big money cruel you, I would say, illusion you to think, oh, wow. What you want to see is consistency. That's very important. You want to see consistency. Number two, you don't want to see fluctuation. You don't want to see suddenly he's up 10%, next he's down like 50%, then he's up 30%. Then it's ugly. It's ugly. And that's not how the market is. I don't know when was this market like this. It's very upsetting, but again, that's not how trading is. You must have very strict risk management that you are fine. It's fine. You want to risk 10%, it's cool. But make sure you're fine and don't be depressed behind it. Because once you lose it, I want you to be calm. I want you to be safe. Because look at it. This blue guy is fine. So, by the way, I really talked a lot about this slide. It's because it's very important. As I said it, guys. If you look back to this recorded video, thanks to Asil, he's recording this, I hope. I have said risk management billion times, maybe. We'll be reaching billion if I haven't. So it's very important. Here, I'm just going to give out a very basic pros and cons of trading. Nothing much. Because if I want to write the pros and cons of trading, it could be an essay of 10,000 words. It's endless. So the pros, capital is never the issue. As I told you guys, capital can never be the issue. Your salary is compounded. One thing, if for those that don't understand compounded returns or salary, which we'll talk about later on, compound salary is basically magic. Okay, magic. That's how simple words I can say it. It's magic. So you work at any place, anytime. You know, last year I traveled to Turkey. I was able to trade from there. In Saudi, I'll be able to trade from there. I'm able to trade anywhere, any place. Okay, my bad. Your income is dependent on your understanding of the market. Do you want to get better? You want to make more money? If so, study. Simple words, nothing else. Yeah, I don't want you to take a bunch of cartons and you'll be making money. No, it's study. Basically, trial and errors, which we'll also talk about how you can improve your analysis. But it's all you studying, consistent hard work. It's not easy, okay? We'll talk about this. I think it's in the next slide. You don't have no expenses. All I have is my electricity, my internet, and yeah, I think so. That's pretty much it. There is TradingView, but it's nothing. Again, you have no expenses, no electricity. To actually highlight this point, which just triggered, because I'm just going with whatever I think. Let's say I love shawarma, okay? Let me give an example. I like shawarma. I'm a guy that goes out and gets shawarma every day. If I'm thinking one day, okay, you know what, Habib, let me open a shawarma. I know it's hard work. How much do I need? I'll be probably needing maybe 50,000 ringgit, which is like $10,000, let's say. It's an expense for you to even start your business. But trading, you have no expenses. So I need what? I need to rent the place, electricity, employees, gas, drinks, sauce, chicken, bread. Because I remember I love this guy, my shawarma place in here. So all those factors is an expense. And they, I would say, hang your profits. They hang your profits. Expenses hang your profits. I mean, right now, COVID-19, we're all closed down. So many businesses are taking losses. Traders, we just sit at home, and I wouldn't say sit at home. No, we don't. We have to work hard. But we sit and, we study, we work, and make profit with no expenses. With yet no expenses, there is always something to pay for, which is you working hard, which we'll talk about in here. As well, mindfulness. How can I explain this point, which is very critical? You see, before this, let me drink coffee again. You see, guys, sometimes people ask me this question: what is the downside behind trading? What is the bad thing about trading? Look, every negative thing about trading is actually positive. I might say, what do I mean? Look, if you don't change, and I want you to set this into your head, because if you don't, I swear to God, you will not understand this, and you will not outperform, and you will never change, and you won't make money, and you won't be anything. Which is, trading will force you to change mentally, physically, and of course, you need to start to meditate. Your ego, which here said, will be destroyed. You are going to be more disciplined. Trading will hurt you like crazy, but the good thing about this, it really prepares you in life. I don't want to give a big lecture about this or anything, because that's the thing about trading. There's a lot of things into it. So whatever problems that I have faced into trading so far, after trading, either businesses or other things are less actually painful than trading. I have faced, I would say I've eaten stone of hell. So there's nothing else that can hurt me anymore. So I'm fine, I'm cool. But that's the good thing about trading. It really tightens you up. It will hurt you. And why? You will only make money once you change discipline-wise, mental-wise. Again, sounds fishy, sounds like, oh, wow, I'm cool. No, you have to meditate in trading. Yes, you have to meditate. Whatever, you just need to get into a spiritual level. So meditating, praying, whatever works for you. But those are very critical. You need to improve with your health, discipline-wise, routine-wise, so much factors, guys. And those are negative about trading. Why did I say negative? It's because the change is difficult. The change isn't easy. So right here, as I said it, through the points already, you might have to face the hardest challenges in your life. Your ego will be destroyed. What I mean in this, your personality will change. It will change a lot. Expect to run through trial and error endless of times. I don't want to talk much about this thing. So it took me 2 years, and I finished it last year. It took me 2 years to finish, or a year and a half, a specific thing that I was testing in the markets. It took me 2 years or a year and a half to finish, and I ran through 10,000 trials. It was something, by the way, and it took me time. If you ask me, Habib, do I still test things? Do I start to learn new things? If I ever become humble in the market, I can never be good. You must love the game. It's not just about the money. Or one thing I'll talk about later on. In trading, you'll reach a level, it really isn't about the money. When you become a professional trader, it isn't about the money anymore. It's just about your performance. You feel like, you know what, I want to know more. I want to expand more. You reach a level where it gets boring. You just love the game. The game is addictive. So yeah, common misunderstanding about traders. So everyone asks me these questions. Do I sit on the charts 24 hours? No. As a professional trader, you don't. You'll sit around 2, 3, max 4 hours a day. So I have a routine. I wake up early. I'm not disciplined with my waking up, but I wake up early and I have 1 hour. I call it power focus. No phone, no distraction. By the way, you think this is something weird that I'm dressing like this? No, I actually sometimes dress like this. I don't wear a suit, but I dress something like this at early morning because I have to prepare my mind that it's working hour. I put my phone down, I have my coffee, which is finished, and boom, Habib, it's 1 hour, let's start it, and I analyze and I do my work. And then I look at the market in the afternoon, at night, totaling 3 hours. Because by the way, once you become a professional trader, you can't do much. You staying a lot of hours, you can't do much. But if let's say you're learning and you're still beginner, I would say the limit is the sky. because I used to stay up. I mean, if you guys will eventually follow me on Instagram, you'll see how this is bad. But yeah, I stay up a lot before or now. But one thing, as I said, if you're a beginner and you're starting and you don't want to work too hard, and maybe you're a student and or maybe you're having a business, a side business, it's fine. But you must set between if you can, 3 to 4 hours a day. Sit and be strict into it and follow 3 to 4 hours. You studying, not trading. You are studying. You're analyzing. You're working. You do multiple things. Here, all we do is click a button and make money. No, that's not what we do. I wouldn't dress like this every morning. I wouldn't be reading the news. I wouldn't be doing so much things if it was just by one button. Here, I just have to give it slight of a humor to wake everyone. We like Trump. And by the way, one thing for everyone needs to know this. When Trump entered to become as the president, the market has been beautiful. Very good. Very volatile. The market is moving aggressively. Us as traders, we love that. That's something really good. Here, another misunderstanding, very common one, which we come back to the leverage and risk management. People think it's a quick money business and easy to double up my money. Well, in the short term, short run, maybe I would say yeah, but I double, triple dare in the long term. Double, triple dare you. People think trading is easier than your everyday job. No way in hell, it's not. As I said it could be one of the hardest challenges you might face. And if you're a person up to challenges, be my guest and do so. One thing that you need to understand, which I want to explain after this last point, people think, which we answered, do you need a lot of money for you to start trading? No, because again, leverage. So here, trading is easier than your everyday job. For anyone, so I'm really glad that everyone took their time to come into this session. By the way, we're not done, but I just want to bring some points. For those that are willing to trade and start to learn and whatever. You have to understand about trading one thing, just one practical thing. You must love trading and not the money. You're like, okay, what the hell does this guy mean? Because isn't it all about the money? Isn't it this is just you working to make money? I would say, yeah, okay. But the complicated part about this illusional idea of like trading and not the money, let your focus to improve your performance and not your money. Don't think on risking high to make big money. Think on your progress. Look at your charts. Look at your portfolio. Last month, how much did you make? Based on percentage. I don't care if you made $1,000. I don't care if you made $1 million. I care how much you made on percentage. So that's what true trading is, guys. You really have to love the job. If you want to say, if you're going to love the money itself, I desperately tell you, this is not for you. No, why? Maybe I wouldn't say not for you, but maybe you're not ready. And I got into trading because I loved the money behind it. But what I mean, later on, you really have to start to love trading in the manner of you're going to study, you're going to work hard, you just want to expand your knowledge. You're going to be addicted to it because it's all about performance. It's all about knowledge. It isn't, as I stated earlier, once you become a professional trader, it really isn't about the money. It's about growing. It's about performance. You're just addicted and you love the game. You just love the game. You know, you guys want to know what a trader is? We wake up every morning. We take risks. That's what we do. We do risks for a living. We wake up every morning. We think we're like kings. We're warriors. We're up. We wake up early, get the coffee done, music, get into trading. That's what traders are. We take risks. We control risks. We make money. We close them trades. We get happy. Done. Do that again. We work hard. Oh, challenges are consistent in trading. And that's why, and if you're a person loving new experiences, trading is for you. Because that's what trading is. Trading is a whole new day every day. It's not a common thing that you wake up, it's just the same thing and you repeat. No. Trading, wow, it's a whole big challenges. And again, you must love trading first. So it comes to the point for everyone here. I think it's better for you to screenshot this if you want or take down notes. So where to kickstart your trading? Let me tell you why I would actually, before I suggested those three things, Don't go to Google. Don't please do this. Don't go to Google and search how to trade. Don't do that. Don't search how to be a trader, how to be a forex trader, or do none of those messed up things, because you will start in the whatever red zone, green zone. You don't know where you're going to start. You might start in a place where you're not supposed to learn. You might start at a place where it's nonsense. Talking about nonsense, guys will be surprised how I wouldn't say stupid. I wouldn't say one. I don't want to use bad words. Okay, I don't want to say stupid, but very, very immature ideologies of trading. There's in the internet right now, as I'm speaking, traders that trade based off how the sun, the earth moves. So they're gonna buy the dollar because the sun is moving like this, or like it's at this angle. I'm not joking. You might want to go Google and read it. It's a book. It's a 500 pages book that you can purchase, and there's a forum and there's people discussing about it. Just to show you how, messy the knowledge of trading is in the internet. Now, because back then, 6 years ago, I wouldn't say there isn't, but it's just little. But right now, there's a lot of nonsense. So right here, what I'm providing you is a place for you good. The syllables are really good to start from, and all that for you to get your basics on. So it's called babypips.com. I did not start from there because back then Baby Pips, I think, wasn't there 6 years ago. But I've went through whatever they provided, and it was very, very good. Very professional work. They're free, by the way. They're free for everyone to know. I'm not sure if they have something later on to be paid or whatsoever, but it's a very good place. Why? It lays out the syllabus needed for all beginners to start learning, and majorly organized way of approaching the syllabus. Because if you go to the internet, you don't know where to start. Are you going to start with leverage, lots, margin calls, what is risk, what is stop loss, there's so much messy things for you to start. So Baby Pips let you start from zero, which is the great thing. And if I'm not wrong, they do actually have tests and exams are available for you to test your understanding. Look, guys, I'll say this. This trading world is a business. It's not a, playground. This is not a place for you to click a button, make money. No, you have to take it seriously. You need to be disciplined. You need to do all those tests to test your knowledge. And third, able to grasp all the necessary basics and move to the advanced levels. I'm not really sure if they actually have advanced stuff, but as I remember, they actually jump to very good content, very good topics that all traders or beginners need to know. Here, our charting. So those charts that you guys see, this whole thing, we go from a website called TradingView. It is free. The charts in there are free. You can view all markets. It's extremely, extremely user-friendly, very much of a user-friendly website among all websites, because there is no charting websites out there that it does half or even 10% of the free offer that TradingView does for users. It has all markets. You have stocks, forex, commodities, everything. You list it. They actually do have a paid subscription. It's cheap. It's cheap compared to the rest, if I should say. Per year, I remember it's $400. And again, you don't need to have it. It's not necessary. The only good thing about it is no ads. That's the major part, no ads. And I think there's other good things about it, but as a beginner, you don't need it. I'm just here telling you that you don't need to search for other charting websites. If you're going to subscribe or plan to expand your knowledge and move to trading, this is the good one. This is the best one. So the third one, Evernote. Evernote is I think everyone knows this. Evernote is basically a journaling place where you have, you're gonna write your journal, your homeworks, your assignments. You can use Word document, you can use Google Docs, whatever place that you will have journaling where you will type every day, because now, this is you, okay? You're not looking at Habib. This is you. You know what? It's time to make money. It's time to take this seriously. I need to be disciplined. I need to write my journal. This is very important. So it's a must to journal your learning. You're like, okay, today I learned this. You got to explain it to yourself and feel, so you got to make sure that you understand what you're learning. If not, what's the point? As I said it earlier, your salary is dependent on your knowledge. You need to have good understanding of the market. It isn't about the capital. Never, please, guys, don't think about capital. Think about knowledge. Think about knowledge, 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 billion times. After knowledge, and in knowledge, I would say, is risk management. After that, you're done. You're ready. Go. So as I said earlier, set a time for you for your trading hours and stick to it. So basically, when are you going to study? At night, morning? I don't know. You said it, but you got to stick to it. You don't, because look, guys, if procrastination had a PhD or a master, I will own one. I'll be the top honors in it. But trading has taught me the hard way to be disciplined and to be tough on it. So I would suggest you to be or learn to be disciplined from the beginning. You don't need to eat, I would say, shit from at the end for you to hustle and work hard on discipline. Start to learn it from now so you can save yourself later on in the future. Of course, self-reflection is critical, very much critical. You gotta trade. Let's say you're studying and now you're actually testing stuff in the market. You're trading, like you're actually buying and selling stuff. You need to journal these things. Oh, one important factor is journaling, guys. You need to focus with this. Journaling is so important. I would have never been a professional trader if I didn't journal. Because what I'm able to see when I'm journaling, let's just say those 3 trades I took this week. I took them because of X, whatever, this thing, this. And I lost 3 of them. So when I journal, and when I'm journaling, I'm able to see why did I lose, and when I compare them to my winners. So let's say I won, let's just say I won 1, I lost 1. Okay, with journaling, so you explain why you took those trades. With journaling, be able to see what was missing in here that was in here. Because this was profitable. I made money in this, but I lost in this trade. What did I do wrong in here, but did right in here? That's what journaling does. You're able to reflect. You're able to see what you did wrong. If you don't journal, you're blind. You're just blind. You don't know what you're doing. You're just losing, winning. You're doing nothing. If you want to improve, you got to journal. Trial and error, very common, as I said. You just got to test stuff. That's how trading is. Oh gosh, this is a very important topic. Okay, wake up. This is very important. This is I wouldn't say this is the summary of this whole thing, but this is the start for all beginners to move on. For that, let me drink water. So there's something called demo trading. Now, what demo trading is basically you trade in the markets, but with fake money, virtual money, not your real money, just a figure in there, $1,000, $10,000, and you buy and sell, make money in there just to test. So people think, let me just lay out these figures and then we'll talk about it. One thing, I used nonsense to some extent just to be nice. I would say 100% it's nonsense. Demo trading is nonsense to some extent. Why? Just because you're profitable in demo, oh, please write this down, put this in your room, put this, tattoo this, put it everywhere. Just because you're profitable in demo, it doesn't really mean anything. I mean, zero, nothing. Why? There's so much factors, but I'll just give out important ones. The demo, when you trade in demo, it lacks emotional triggers. What do I mean by emotional triggers? When you lose 50% of your capital in demo, do you feel sad? No. Do you feel happy? No. It's just nothing. You don't feel anything. But that's what trading is. Here, I'm showing you 90%, 10%. That means trading is 90% psychology. If you have your notebook right now, take a whole new page, draw this pie chart and write this down. Trading is 90% psychology and 10% strategy, because this is a fact. And I'm not telling you this because you're going to be the superhero, because I always thought I am the superhero. I have always had this feeling. Not just you, not just me, it's everyone. You're like, yeah, okay, I get that, but I'm professional. No, everything about psychology and trading. And I need you to understand this. So anyways, going back, demo can barely be taken seriously, which comes back to the same point. trading from demo to live can be extremely challenging, which we'll talk about right now. Understand this again, just because you're profitable in demo, it doesn't mean anything. Now, you feel that I'm super against demo trading, and why am I saying this? Look, I have no benefits behind you trading demo or none. I care about your performance. Let me tell you, demo is nothing. Why? When you lose, when I lost my first, so when I opened my first trade in my live account, when I did $100 deposit, I was losing $1. Guys, I know it's $1, but I was super stressed. I was like, what is going on? What is really happening? I'm like, oh no. I was like bad. I was in a bad mood. By the way, again, I'm telling you, I'm a beginner. I started. I had no one to lead me. It was a tough journey. But I'm just telling you this. Because before this, when I was in demo, I stayed in demo for 2 weeks, guys. I didn't stay for long. I stayed for 2 weeks, or I think max was 3 weeks. And I was like, wow, I was making big money, by the way, in demo. And I jumped to live. And oh, it was painful. Like the emotions, I'm not telling you the losses. It was just painful to you. Like, what's really going on? So demo lacks one of the biggest critical thing, which is emotions. You can't lie to yourself. Let me tell you guys, you can't lie to yourself and say, I'll take demo very seriously and be like live. Yeah, to some extent, as I said in here, you can. To me, as I told you, I procrastinate, I'm not disciplined. That's me as Habib. That's who I am. I'm trying to improve into it, but I couldn't take demo seriously. And I would say 90%. But if you can, let me tell you, you are blessed if you can. You are really blessed. But majority can't. So demo isn't really the critical way for you to start. So the question comes, everyone wants to know in here right now, should I jump straight to live? I would say this. If you feel you're ready, you're good, you want to start to trade, go demo just 1 week. Don't go with 1 month, just 1 week. Whatever your performance is, good or bad, doesn't matter. Next week, go in live. Go live and deposit $100. I'm telling you, $100. Don't go $10,000. And guys, one thing, please, 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 please understand this. The higher the capital in your trading, the better it is. If you are not willing to invest up to $1,000 in your trading, I don't suggest you to get in, because this is a business. This is a serious business. Again, even a shawarma shop, the least thing will cost me $50,000 to start. Ringgit, I'm talking. And when I said $1,000, I meant like dollar itself. So you can't say that I'm gonna start with the just $500 and that's it. No, as I told you, get in with $100 live and lose that. I wouldn't say lose that money, but try to go with 1% risk and have the taste of pain, if I should say. Have the taste of pain in markets. You need to test the water. You need for your feelings to get out. It's like you suddenly becoming mature. That's what trading is. So that's the important factor about life. Now, trading lessons and advices. So we're technically done with the basics. Right here, I'll just be giving advices from my side. Just to cut one big journey for every trader that wants to be a trader in the future. Let me cut it down from here. Let me sum it up, because I have tried almost everything that you might have thought of and still maybe trying. Indicators. So those are like those big zigzags, those weird things. Those are called indicators. So indicators are algorithms that display data based on the market inputs. So right here, this is an indicator, this is an indicator, this is an indicator, this is an indicator. Is like, this is a common misunderstanding. People think the more stuff you have, the more advanced you are, the more like sick looking you are. You look like a hacker. You look like, wow, you manage $1 billion. No, 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 no. The less you have, the better. Let me say it. The less you have, the better. So 99% of traders don't understand those indicators. And the more indicators you have, the less it shows you understand the market. Because what truly is the market is those things, those candles. Those are called candles that are going up and down. Those are going up and down. Those are called candles. That's the true market. That's the true value. That's the true data of the market. You need to read those. And unfortunately, I did not write it down. I want you, if you're interested, what to learn and what to study on, I want you to write this two things. You need to study price action. So just write price action. Whatever you can, read as much on it. This is what I want you to do if you're need to work hard. So study price action, and I want you to study. There's a good book. By the way, I've read a lot of books about trading. 90% of them are nonsense. Like they're like thick, thick, 400 pages. What's important is like 10 pages. So I'll just give you what to really read in Google or whatever. So price action, very important thing to read. That's what you really need to know. Number two, I'll give you a book that's, I didn't read it fully, but I read half of it and it was good. It was called The Science of Technical Analysis. The Science of Technical Analysis. So write these two things down. Price action for you to study and expand your trading, and the Science of Technical Analysis. So to continue, indicators can be highly misleading because one thing, those indicators, one of them can tell you it's going to go up, one of them can tell you it's going to go down, one of them is going to go up. It's messy, okay? Now, again, the less you have, the better you are. And let me tell you about me, if you're going to ask me this question, yes, I trade without indicators and they can never be the reason I take positions. All I have is a simple moving average and nothing else. To say it one more time, sum it up, guys, please get away from indicators. Get away from them. They wasted my life. They wasted my time. You don't need them. You don't need them. And if there's custom indicators, which is a common thing, like the custom indicator that tells you to buy, to sell, it's bullshit. It's all nonsense. Because if it was true, everyone would have been profitable and just click a button and just make money and don't need to work and work hard. But it's not. Yeah, finally jumping into this. So, as I told you here earlier, where was it? Yeah, compounded salary and returns. Okay, so compounded salary and returns. That's the pro thing about trading. So for those that don't know what compounded salary or like compound interest is, right now I'll be explaining it and further show you how much, if you stick to proper risk management, how much you can be making in the long run, just like this guy. Wait, where is it? Just like this blue guy and not this red guy, to show you how risk management is good. Even if you are gonna earn very small, because as I said, lose less and earn medium. So right here, I just made this. This is a risk management Excel file that I've made with a friend of mine. His name is Daniel. He's a great friend of mine. So this is not out in public, but this is something that I made for you guys. Let's say, I'm just giving an example. We have a balance account of $1,000. So Habib started with $1,000, and I will risk. So every trade, I'll be losing 4%. Focus with that. Every trade, I'll be losing 4% on that capital. And if I'm going to lose 4%, I'll be earning 8%. So it's either I win 4%, if it's either I earn 8% or lose 4%. Is it set? Let me tell you guys, sometimes you actually can earn up to 10%, 15%. It all depends on the trade. But one thing that is set is 4%. Sometimes you don't earn 8%. Sometimes you earn like maybe 5%. And it's because you have a lot of things to do in trading to maintain your trade, maintain so much factors, which again, I'm just telling you the average, since you're going to earn sometimes 12%, sometimes 8%, sometimes 2%, it averages to an 8%. And your risk is set. You don't go below 4%. Now, focus again. So if $1,000 I start with and I risk 4% and I earn 8% per trade, out of all this 100 trades, I win 75%. Oh, I don't know why there was a limit of 50%. So I earn 75% of the time. So I earn 75 trades and I lose 25. So just do quick math on that. Nothing much, nothing advanced. By the way, if you're going to ask me what is the common win ratio between traders, the median will be 60. It could go up to 80. And based on big number, I'm not talking 10 trades, because there are times me or other traders, they earn 10 trades in a row. That doesn't mean you're 100% having a win ratio. Of course, that's nonsense. It's all about that long run. So out of 100 trades, I'm assuming I'll be 75% profitable. So again, either I lose, earn, lose, earn, lose, earn. And this is the compound interest magic. So with $1,000, I'll be ending with $120,000 after 100 trades, and with me having 75% win ratio. Big number, guys. And all started with $1,000, risking just 4%, and for you to earn 8%. So you'll be losing $40 and earning $80 per trade, and consistently, because with $2,000, 8% is different, and surely it will be. From one of the most respected guys to me, Albert Einstein, he said one thing: compound interest is the 8th wonder of the world. So again, the key thing and the key magic about trading is compound interest and nothing else. Because as I told you earlier, if we come back to this slide, it's about you losing less and you're earning medium. So you go slowly, slowly. In the long run, it builds up to a bigger capital. Don't be this guy. Trading is all about risk management. It's all about your education and discipline. End of story. That's pretty much it. I guess it was, wow, I really loved this call. But yeah, that's the sum of it, guys. I'll welcome, because I think we have another 30 minutes, I'll welcome any questions. So if anyone has any questions, please send them through. This is my contact. This is my business contact. If you're interested to contact me, this is my Instagram and this is my email. Big thanks to Global Youth and Sustainable Organization, Seal, and big thanks to Hifdullah. He's a friend of mine that brought us into this webinar and made this webinar true, or I would say come true. So any questions? I'll be able to answer questions. Which kinds of stocks? Okay, well, I'm seeing multiple questions. Which platform do you recommend for FX or stocks? By the way, for anyone who's gonna send message, please make sure it's to everyone so I'm able to view it, because I see someone texting me in my phone and then to another place. So okay, to answer this question, which FX, you mean broker? Okay, broker-wise, I would recommend those 3, or I would say 5. You guys have to make sure they're regulated. Number 1, I would go with Interactive Broker, but it's very advanced. If you're a starter, I would suggest you eToro. Yeah, eToro is good. It's highly regulated. IG Market Live. Everyone search that. It's the world's biggest broker. IG Market Live. 4th would be what is it called? Swiss Coat. It's a Swedish bank. Actually, when you make an account in there, you actually will have a Swedish bank account with them in Sweden. Very fancy, highly regulated. So Swiss Coat. 5th, Other Trade is really good. It has, I think, 7 regulations in the world, which is very, very important. But yeah, those are the brokers I would suggest for everyone. The others, again, I don't suggest Interactive Broker, guys. That's the one I'm using, but it's really, really advanced. Yeah, it's very advanced. Till today, I'm still learning how to use and get used to the platform. So any more questions? What is your idea? Okay, thank you. Thank you for Muhammad to ask this question. So binary options, guys, never do it, please. I've done it way back. I think back in 2013. Binary option is nonsense. It's bullshit. It's unregulated markets. It's unregulated. You guys need to know one thing. Just because a company is regulated, that doesn't mean it could be trusted, because you need to see who the regulation is coming from where. Because we can get you going perfect coffee and me. Man, that's great. So yeah, we can have, what is it called? We can have regulation coming from, I don't want to beat that to any country. Let's say a very poor country, okay? A regulation can go from there and be regulated, but does that mean it's safe? No, it's not. It's bad. So just go with those five. So yeah, binary option, no. Just don't. Save your money, man. Just save your money. Is FTMO legit? I've heard a lot about it. I have never, I don't know anyone that went to them, but I have friends, like I don't know personal, but I have friends that tried to go with them. And yeah, apparently they're sort of legit. Are they a good place? I wouldn't suggest you to depend on them at all. FTMO, they're, again, I really can't talk a lot about it. Yeah, man, EU going perfect. Guys, if you ever want to treat me, coffee, 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 that's all. Hey, what is your opinion? eToro, yeah, eToro is very, very good, I would say. I haven't used it, but I would just suggest you again, IG Market Live, it's the world's biggest broker. Second would be Swiss Code, highly regulated. Third will be AvaTrade, they're highly regulated as well. What is it called? Yeah, you just have three. You don't need anything else. So what are your confirmations before entering a trade other than first actions? Good question. I'll explain it. What is your opinion on the option of copying professional traders work like? Okay, this is a very, very common questions. What is your opinion on copy trading, on how we can get into it? So, okay, to answer the first question, what are the confirmations I have before entering other than price action? It's nothing except price action itself. I do consider momentum. So I assume who's asking these questions is an advanced trader. So I'm going to answer in an advanced manner. So you have to understand momentum is a very, very critical thing in trading. So just candlestick patterns are never enough for you to take an entry. So make sure you have other considerations. What is your opinion on copying professional traders? Yeah. So here's the thing. Let's say for you as a person that would like to trade, let me tell you guys, please do not go to signals. Do not pay anyone to give you signals and all that. That's completely scam and bullshit. Okay, completely scam and bullshit. If you wanna trade, two things. If you want to expand your knowledge, two ways. Number one, you either, if you're gonna trade yourself, I would suggest you go in the internet, do whatever you want, find a mentor, find someone that you feel like, you know what, this guy has something that I want, and you gotta make sure. There's so much scammers, let me tell you. There's like 99.9999% of them are scammers. First, you gotta make sure they're the one that you love, they're the one that you can see their potential and they're legit, then go with them. And if they're cheap, if I should say this, then don't go. They, big mentoring ones are usually expensive, so you have to pay the price for it. Number two, which comes to this question, copying traders. Yeah, so it's a very good one, I would say. I have never directed into copying trading whatsoever, but if there is those in the internet, you can copy trades and whatsoever. It's an okay thing, but don't over risk with them. Don't go massive fun amounts with them, because if you don't know what's their risk management, you don't know how disciplined they are, you don't know anything. But if you guys want to invest with a trader, this is what you can do. If you know an individual directly that he has really good money and he's making good consistent money, go with them. But one thing, don't go with the one who's, hey, welcome, please get it. No, you know him individually, you trust him, you feel like he's the one, go with him. Second, invest with a company, which is a better manner. And usually if you're going to invest with a company, you will need a big capital. They might ask for $10,000 and whatsoever, and a legit company, an investment company, guys, not a company. There's so much pyramid scheme, poison scheme. I think they're called poison scheme. Poison scheme. Anyways, like one of the schemes. Anyway, you guys get what I mean. There's so much out there. So many. So don't go with them. Yeah. Any questions before we end this? Can you send us the Zoom section? I do believe it's recorded. I gotta make sure with the organizer. Again, thanks to Asil as the organizer. Any questions? Well, the water. Do you read the comments in here because I have it in the phone. You use support and resistance with price action. No. So if you okay, this is what I want you to do, Hazik. So this is what I would like you to do. Take down notebook right now and write down what I'm going to tell you. Go to the market and draw just randomly. Close your eyes and draw support and resistance lines. Just draw a line, okay? And open your eyes and look at the charts. You will see every price in the market is a support and resistance. So no, don't ever rely on support and resistance. What I could suggest to you in here, in short summary, because I can't really go in depth, it's a very long explanation, which is use zones. It's never one price, it's a zone area. So you want to highlight the zone, and it's not like a big 1,000 pip zone. I would say like 30, 20 pips, 40 pips zone, depends with the pair. Second thing, go with the higher time frame. I'm talking daily, sometimes H4. Daily and weekly are the good time frames to zoom out. Look at the price where market consistently bounce. That's the zone you would like. Because again, support resistance is bullshit. What are the common psychology mistakes in trading? I love this question. When would be a good indicator or sign that you're ready to get into trading? So, okay, what are the common, this is a very beautiful question. And he knows why I'm smiling. So what are the common, so guys, psychology, as I said, it is very important. Now, the common psychology mistakes in trading is being too greedy, fear. Guys, I was talking to very, very close friends of mine today regarding fear. You guys have to know, no matter what, you really have to stay calm. That's what trading is. When you become scared, when whatsoever, you destroy your performance. You need confidence, I should say. Confidence, people lack confidence. Usually at the start, every guy who starts to be trading can make big returns at the beginning. And it's a very common thing, very common. When you start, you make money because you have confidence. You're like, wow, I'm the boss. But then eventually decline. So there's a lot of common psychology mistakes. But yeah, lack of confidence, discipline of risk management. When would be a good indicator of signs that you think one would be ready to get into trading? So you're in tape reading. So okay, yeah, I think that's a very good question, Ivan. You see, whenever you feel you're ready in the manner of understanding, you feel like, okay, now I'm ready. Like in the manner, you will feel it in heart. Like, okay, if not now, when? Okay. Once you reach that level, you can start to tease yourself slightly. Don't explode with energy because everyone, I hope not everyone after this call wants to jump and wants to trade. It's like, oh, well, look, it's not speed, it's efficiency. It's never about speed, it's about efficiency. That's what trading is. So when would you be ready? It's when you feel like, when you analyze, when you go to the charts, when you read, you feel like, yeah, I understand this, or I get what I'm reading. And yeah, when you journal, you feel like, wow, okay, I'm getting it, I'm understanding, I'm having less mistakes. Don't think that you will never have mistakes, you will. But just saying your mistakes have decreased, and you will only know that when you journal, when you reflect. What's your view on tape reading? Too much hustle. Yeah, it's too much hustle, tape reading. It's very common. Would you prefer long-term investment or short-term if using the leverage? There is some daily fee, right? Yeah, of course there's. So again, those daily fees, they're almost like nothing, if I should say. They're barely anything. Would I prefer long-term investments or short-term investment? I like those opinions, those questions. So I trade and I invest. There are circumstances or cases where I'll be into short-term investment and long-term investment. Example, I don't really talk this in public. This will be my first time. So my portfolio right now, all I have is 5 stocks. I invested in Zoom. So as soon, I unfortunately didn't get into Netflix. So as soon as, this was an obvious trade, or investment, if I should say. When I was, yeah, Zoom, by the way, Zoom, this company is public. So when I when the quarantine started, when businesses officially announced they will be working from home, and I remember the first company was a bank, a big company, a bank actually. I knew this is the time to invest in Zoom, and I got in, and it's a short investment. I have short-term investments, I have long-term investments. But yeah, I'm not going to talk about the rest of the four investments. What is your opinion on trading crypto markets? Never. Don't trade cryptos. Because cryptos are like traded in the weekends. I used to be addicted to trading, so I used to trade Monday to Friday. Monday to Friday, market is closed. I'll jump on weekend and trade cryptos. But it was like too much of a hustle, too much of hard work, and it's highly volatile. I wouldn't suggest it, although the principles are the same, but I wouldn't suggest it, I'll be honest. I wouldn't suggest crypto trading. Any more questions? Don't ever be shy. This is the time for you to ask all you have, and I'll be glad to answer. Yeah, definitely. I think I'll be able. I do believe the organizer, because I could see that it's being recorded. So only after the call I'll be able to send you the link. I'll be able to send you the link. Yeah. Should I quit my job and do trading? Yeah, beautiful questions. Okay. Is price action applicable? Yeah, price action is in all markets, everything. Where are we able to cover your trades? No, I don't do copy trading. So, okay, should you quit your job? And this is a very, I mean, if you're interested into asking and for the question, you could hit me up in my WhatsApp or Instagram. But yeah, should you quit your job? If you are consistent and you're able to meet more, this is critical, more than your salary, just 10% on monthly basis for 6 months, 5 months, quit your job. But if you're not, then I wouldn't suggest, because you're being very risky. And as I brought it earlier, trading is all about efficiency. If you're stressed about shit, now I gotta make an income because I quit my job and I'm still not consistent in trading, your performance will not be looking good. But yeah, look, if your aim is to quit your job and do trading, I can tell you, you will do it, hopefully. If you work hard, you will. Is it profitable to trade without compound interest? Is it profitable trade? I don't get the question because, okay, maybe you misunderstood compound interest. Compound interest is basically you, when you make more money now, like let's say 1% or okay, 10% of $1,000 is $100. Okay, let's say somewhere in the future I am now $2,000 in profit. That 10% is no longer $100. Now it's $200, and that's compound interest. So yeah, compound interest is basically calculation of your account expansion and percentages. Is trading in all companies or Apple? Like, oh, okay. Is it profitable to trade that compound with? Okay, like trading all companies. If you mean with leverage, then I would assume no, because I trade. I majorly trade in FX spots, in commodities, in indexes. I do trade sometimes company stocks like Apple, like Tesla, but they're all the same. The principles are all the same. And for earlier question, is price action in all markets the same? All of them. You can't. You can hit me up and I'll tell you. I'll show you. No matter what, it's all the same. No matter what markets. Oh, okay. Okay. If that's what you mean, it's fine. But you beat the purpose of trading. You beat the compound interest is the magic. Is it hard studying trading while studying for college? No, because I was doing my trading studies and hard work in my high school times, and I was in my finals, so like IGCSE times and whatsoever. So definitely no, because by the way, even now I have I'm studying for CMT. It's like a trading license exam. I'm also studying for my nano degree. I'm studying artificial intelligence. I have multiple things going on. I'm still a trader and still hustling. So yes, you definitely can do whatever you can do. Nothing should stop you. Not college, nothing. You just have to work harder. That's it. Oh, okay. Look, because I don't want to really talk about any religious work or whatever. If you're asking is trading or like leverage is halal, yes, it is, because you can go to brokers that give you Islamic accounts. So there is something called Islamic account for the Muslims. For whoever is Muslim, they have that in offer daily. How many hours to invest? So, okay, as I think I've talked about it earlier, if you can give quality 2 to 3 hours a day, that would be awesome. That would be really, really good. 2 to 3 hours a day. Is market getting harder? No, market is getting a lot more tastier. I think, let me turn off this light because I think it's slightly bright. So yeah, trading is getting a lot more, market's getting a lot better. Back to support resistance, should I treat them as a zone of price action? Yeah, yes, Hazik, exactly. So you want to have those zones, okay? So it's like this zone, and let me see if I had any. No, I don't think so. I had any more. Um, yeah, unfortunately, I didn't have any examples in here. But yeah, um, that's pretty much it for it. So yeah, it's just as zones, and you want to observe price actions in the higher time frames. How do you manage your studies and trading at the same time? Well, since right now I have like 3 hours to stay on the market, I'm able to have that 1 hour early morning focus, late afternoon 1 hour. And studying, I am more of a night person. I don't like to work in the morning, or I don't like to study at night. I would suddenly turn off my phone and just do the work. I'll be honest, I used to think doing 30 minutes, 1 hour of my studies, and then rest, 1 hour, then rest is good. But no, I found, let me tell you guys, and I need everyone to be honest about this. Those slides that you guys are seeing, all of them I did it today. I only work under pressure. That's me. So I can't really work with no pressure. So I work like, I think 5 hours straight, boom. So yeah, that's how I balance my studies and trading and other things. So it's like suddenly I get in the zone and just blast everything and work hard into it. One thing, divide your time. Is it good to invest during this pandemic? Um, Guys, please hear this out. Is it good to invest during this pandemic? Let me tell you something. This is the time where you guys will never see in your lifetime in the future ever of an investment opportunities. I'm talking expensive. This is the best time to invest. Not right now, not right now, because there is more to the downside in the markets. If you guys want to hear it out, if you want me to bring some bonuses, let me tell you, gold is going to go up consistently in the long-term future. The stock market will have a lot more room to drop, and that's pretty much it. So only when it drops massively, this is the best time to invest. That's the best time to get in. So yeah, during this pandemic, there's opportunities I can't explain. They're so precious. As a beginner, should I just trade one pair? So yeah, I would definitely suggest you to stick with one pair. That would be so good. So you have less to work on. Just stay calm. Just stay focused. Know what you're doing, and that's pretty much it. Does trading get in the way of your social life? No way. I if you know me to the personal state, and if you know Habib in general, I'm very social. I go to events. I mean, I would even love to know you. So it's I know no way it does affect my social life. The opposite, actually. I became more social after I became a professional trader, expanded my network with big people and whatsoever. But in general, no, it can't, because as I told you earlier, you can't really sit on the market 24 hours. There's nothing you can do. If you're talking about studying, that's fine, but there is a limited time for you to start to progress slowly to decrease the amount of hours you're going to work on. But no, trading doesn't affect your social life. It actually even improves your social life, if I should say. Any more questions? As I told you, so I think it's like we have another 5 minutes before we end this. Ask whatever questions. This is the best time. Should I? Oh, Ryan. Ryan, sorry. Yes. The dip. Everyone wants to buy the dip. Come on. Yes, buy the dip. But I'll be selling the dip. I'll be selling every time you buy. that's who I am. Ryan, he's a great friend of mine. Are there any good YouTube channels in trading? No, I don't remember. No, there isn't. I've used. I don't suggest. I don't have a view, and no, man, I'm not gonna look private. So yeah, I don't have any view on good YouTube channels in trading. Again, if whoever is gonna work hard into trading, most welcome. I really would love to have questions. Again, just reach me out on Instagram or WhatsApp. I'll just give you know, answer to whatever I can. That's what I would do. Have you busted an account? I have busted one account, and after that, like and it was like a $200 account. But after that, I was consistently like this. Like after, like again, when I'm still immature, I was like consistently this close to busting accounts, this close to busting accounts, always about to busting accounts, and that's why I suffered in trading. I'm like, just lose or make an earning. What the hell? It was very tiring. Thanks. Oh, no, thank you so much, man. I appreciate it a lot. Thank you for you to being here. Any other websites in trading besides the ones you have mentioned? I have no I don't really have information, or I could lead you to one. But that website could be very good. How do you not give up when my account is almost busted? Oh, this was also a topic I talked about with very close friends of mine today. It's hope. Because I've been, by the way, to tell you guys, so when I traded, I didn't straight become profitable. That's nonsense. I suffered for 2 years and a half. I should say 2 years and a half. And that was like the big suffered. So it's like the ups and down, up and down, up and down. You're just like never anywhere. So it's just the fact I've been there for 2 years just pushed me a lot more. And I knew for a fact there is a big potential in the market. It's just me who has to be fixed. It's not that, it's me. That's why I still did not give up. And let me tell you, if you are hustling and you are gonna work hard, don't give up. Because if you do, you just wasted all your years, all your time. And only if you like trading, not telling you anything. So any more questions, guys? I'll just stay here for another 5 minutes before I close this up. Any more questions? I'll pour myself tea. This is coffee. Ask all you have, guys. Yeah. My pleasure, Dash. Oh, Dash Vinny. Oh, Dash Vinny, thank you so much. I'm really glad to have you here. Thanks, Sajad. Thanks a lot, man. Appreciate it so much. Thank you, guys. I really appreciate it. Appreciate all the support. This is amazing. Thank you so much. And know for a fact, I'm always here if you guys need help. Don't give up if you're gonna hustle, and keep it up. Thank you for being here, mostly. Thank you for being here, guys. Appreciate it. Thanks. I love this feedback. You know what? I'm gonna screenshot this feedback. So somewhere in the future, maybe I remember one of you guys. This is so beautiful. Lovely. Let me save it. I will call it Beautiful Memories. Okay, yeah. All right, guys, you have a great evening and great week ahead. Stay safe and peace. See you guys.